Good afternoon, traders. This is Christian from Extravagant Trade Group, and this is your end of day market recap for Wednesday, September 18th, Fed Day. And I'll go over some of the moves that happened with the Fed meeting today. Before I do that, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. All right. So yes, Fed cut 50 basis points. And what did the market do? The market was very whippy, as it normally is on a Fed day. And based on the price reactions that we're seeing, most of that was already priced into the market. Again, besides the initial reaction and the whipsaw and algos, driving those equities back and forth and so on and so forth. Again, that's pretty much par for the course on a Fed day. That happens almost every Fed day. But overall, I think, as I've been saying, and again, this is not being right or wrong. I'm not trying to be right or wrong. But when you do the analysis and you kind of come up with something that you think is significant, I do repeat myself, and I hope it helped. What I was basically saying was a very different viewpoint than what you probably heard on financial media, with them debating about whether or not they should go 25 or 50 basis points. The writing was already on the wall, guys, and this is the 2-year, that blue line that you're seeing is the 2-year yield, right? Notice, and the white line is the Fed fund futures rate. That's what the Fed controls, right? So you could kind of see over time what's happened from time to time is, first of all, there's a pretty good relationship with what the 2-year yield is doing, which the Fed does not control. It's controlled by supply and demand. It's controlled by the market, and what Fed fund futures are doing. So it's a little bit of a barometer of what the Fed should be doing if they didn't get involved at all. Now, you could argue whether or not they should be involved at all, because the market fluctuates and kind of takes care of itself. So the Fed will artificially raise interest rates, cut interest rates, but overall, the 2-year yield kind of tells you what the story is. And for the last, basically since April, this 2-year yield has been moving lower, right? So yes, they are late to react to what the 2-year yield has been doing. Have they done this before? Yes, they were late in 2007 and by cutting interest rates. So it's going to be very interesting where this goes. If this continues to go lower and lower and lower, yes, it does. It is an indicator of what the economy is up to, but it doesn't mean, like, I'm not saying that this goes all the way down here. And in fact, you actually saw a move the other way in interest rates today. So I just think, I think the main thing to kind of learn from today is get out of this narrative of, why the Fed did it. Was it political reasons? Was it, why did they do 50, and why didn't the market react as much? Again, the writing was already on the wall in terms of what they needed to do today, right? So that's where we are. A couple things that I thought were notable as the market moved around today was, besides, so again, the Fed controls those short-term rates. They don't control anything else unless they're providing stimulus. But I started to see this reversal yesterday in TLT, and look at it. So this is the first time, and again, like, these are not ginormous moves. So let's put this in the right frame of reference. They're not big moves, but they should be telling you something, right? Bond yields have been going. So again, this is bond prices going up. This is inverted with bond yields. So as bond prices have been going higher and higher and higher, well, look at what happened yesterday. They reversed yesterday. So there's a little bit of a change in the overall market. And now all of a sudden, yields are starting to go higher. Right. And I know you think, well, they cut interest rates. Well, it's a catch up type move. Right now, if you look at what happened today in the yield curve, right, again, forget about what the Fed did today, but look at the yields were up across the board today, right? Which again tells you a little bit risk off today. And that is more so what happened with IWM today. Also, the overall move, depending on like what index you're looking at, but let's say that you're looking at dollar futures, and I think I'm going to bring up Thinkorswim for this, because it's a little bit easier to look at this. But the dollar, when Look at the reversal in the dollar today. So this was up 0.4 of a percentage point. Now, is it a huge move? No, but it just kind of, it stops and trend. Right? And it's not by accident that this thing tried to take a leg lower and reversed and went back into the range. And then look at what S&P futures did today, or just the S&P. We'll just bring up SPY. Same thing. Price tried to take another leg higher and it got rejected. Do you see what I'm getting at here? So again, not so much about the Fed. I think more so about what the dollar did today and the rates that the Fed doesn't control. All right. I'm going to say that one more time to you. All right. Today wasn't so much about the Fed. It was more about what the dollar did today, getting rejected from going lower, and what the rest of the interest rates did that the Fed did not control. And I think if you analyze it in that sense and forget about the Fed mumbo jumbo, I think you kind of come up with what your answer is. Now, again, you have to go back to understanding a little bit about today. There's a lot of traders that are trying to figure out. There's a lot of algo moves. There's a lot of fake outs that happen on Fed days. All that, again, as I said, is par for the course. So where does that leave us for this point? Well, I am going to show you, I'll do one other thing because I said forget about the Fed, but you still have to pay attention to this because there's a lot of traders that are paying it. So even though I don't think that we got anything new from the Fed, we heard the word recalibration about 100 times, but I think that you still have to pay attention because there's a lot of institutional traders that are making decisions based on this. But yes, they're probably, the next Fed meeting is not till 2 months away. That's on this, or a little bit less than 2 months away. It's the 7th of November, and they're probably going to cut interest rates again. They're pricing in another 25 or 50 basis points, and it will. And so okay, where should the light bulb be going on for you? In in this video, the light bulb should be going on. Hey, let's watch the 2-year yield, and that should give us a sense of what the Fed is going to do the next time around. Again, this yield continues. If this yield continues to go lower, 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 and fast, that means probably that the economy is slowing down fast, right? If it manages to kind of hang in here and oscillate back around, then you probably don't have to worry about it too much, and you probably don't need to worry about what the Fed is doing. What do you need to worry about then? You need to pay attention to the price action, right? And what's happening, right? Because again, these are important things when when interest rates are moving quickly, when the dollar is moving quickly in either direction, right? That's when you want to, be at the front of your chair and paying attention. When these things are kind of in a range and not doing much, then more micro effects will take place, and you can watch what single stocks are doing and sectors and so forth. But when the dollar is moving very quickly, what will happen then is most likely volatility will increase and things start moving, everything starts moving together. All right. So what did it tell us in terms of sectors today? Or just let's just start with the overall market. Let's not go into single stocks today, but I heard a lot about, oh, well, we've made such a big move over the last week. Okay, you're just going to look at the last week. You're not going to look at the last 2 weeks because the last 2 weeks the market hasn't gone anywhere. We're essentially flat. So some of these arguments that people make on Twitter are like, I don't know if people really think about some of the remarks that people make. They just want to be right on Twitter. I don't think half these people on Twitter are actually trading anything other than, paper calls that they make online. But look at what the S&P has done for the month. Do you think it's overbought? It's down 0.4 of a percentage point. So yes, so people get their head wrapped around, oh, the S&P was up 6 or 7 days in a row. Look at what it's done for the month, guys. It's flat, right? So the main thing to watch is and then if you even take a step back further, okay, and look at the highs of where we were back in the middle of July. Now, again, I'm cherry picking, right? I'm doing the same thing. But go back 2 months ago from the highs. Again, I'm picking the highs, but price hasn't gone anywhere since. If you take exactly 2 months ago, price has not gone anywhere. Right now, it's giving you tradable ranges and things to do, especially if you play both sides of the market, right? If you're just playing the long side of the market, you're probably having a little bit more of a difficult time, depending on how quickly you get out of your long positions when we break down like this. If you're hanging in your long positions too long, right, then you're suffering, because every time we start to go up, you're having to dig yourself out of a hole. And I've been there with some of this, right? I've held on to some positions, my higher conviction positions. So I think it's been a tougher 2 months. Now, if you're just day trading and being very quick with your trades, then you're probably doing a bit better, right? But overall, I honestly, when people, it's such cringe when people are saying, oh well, we're overbought, because we've gone up a few days in a row. Again, what's your perspective here? Because we're still down for the month, and we haven't gone anywhere in 2 months. Now, this is just the S&P 500. Now, do you want the good or the bad? The good is the average stock has done better, and breadth has been pretty strong, and this is very close to new highs. But you have to also keep an eye on what's going on with the new highs and the new lows, right? So let me bring this up here. Right. Here are the new highs versus the new lows, right? For the S&P. Well, they actually expand. They actually did it. There's 122. But I just want to bring this chart up, right? Notice that the last couple days, the breadth, and this is one day, there's a lag here, right? I would be cognizant that we're not making the 4-week new highs have not been increasing, right? So again, go back to 2 months ago. Here's where all your new highs, you're a big expansion in new highs. Every time that we've come back, right? Notice that we're making less stocks are going out. Right now, again, this is just 4-week new highs. So again, I kind of look at the shorter term, 4 weeks new highs versus new lows. But every time that we get back to the same point, we're doing it. There's less names that are breaking out, right? So there's a bit of a divergence going on, right? Also, so let's do the same thing. If you think, oh, well, that's just the 4 weeks, you're looking too short term. Look at the situation with the with the 52-week highs, right? Look at how this happened back in here as the market was going up and up and up, right? You did have some expansion in new highs a couple times, as we went along. Now, not every day was perfect, but these are not making new highs are not expanding, both on the 4-week, definitely not the 4-week, and you could kind of say not the best looking. It's not as bad in the 52-week, but kind of gives you a sense that we're losing some momentum under the hood, all right, by looking at those new highs versus new lows. So again, this is still not bad, right? This is nice, made new highs here. Now let's look at a couple of things that aren't so good. Well, if you're a big fan of Qs and all the growth stocks, then you're not going to like this if we fall back below the 50-day moving average, right? Because a lot of growth traders are focused on what the Qs are doing. Here's your high, here's a lower high, here's another lower high. Unless we break, now again, it's not the end of the story. Like, this is just one day doesn't make a trend. What I would really be paying attention to is the 50-day moving average. Price breaks below that 50-day moving average, you've got your answer, right? That growth is not the place to be right now. And in tech, right, there's more tech that's in the Qs. But if we can hang in here and build this out and then begin to push higher, then maybe we can get out of this pattern. And again, that's why I have this downtrend line drawn, because there's too much field in front and in here and in down in here, right? So the moving averages help a little bit, but also sometimes drawing a trend line also helps. All right, I think I kind of covered all the bases. I mean, we could look at IWM too, but IWM is going to need is going to need that 2-year yield to continue to move lower too, and also more rate cuts. So again, it was a pretty decent fake out day for IWM. 1-hour chart, I think you're going to see this VPOC being taken out. I faded this today. I didn't go back and fade it a second time, unfortunately. So, I was looking for after the initial move higher this today and then kind of digestion. I was looking to see if price could kind of rebuild, and here's what I'm referring to. This was very, very, right after this, but unfortunately, we did get back to highs and then got rejected again for a second time. All right, guys, I'll leave it there. ultimately, the takeaway, like, so there's a lot of things that I'm mentioning in this video that are probably going to be, different than what you've been hearing, or maybe a little bit different. So number one, I hope to add value, right? So if this adds value to you, obviously you get more detail in the Tribeca Trade Group trading room. If you're not up for doing that, just do me a favor and like the video, subscribe to the YouTube channel. I appreciate that as well. Where does that leave us? Well, I would say, just as I said, have some perspective about like what we've been doing the last 2 months. I would also have some patience here. This is also supposed to be a frustrating time of the month, right? This, in terms of seasonality, the second half of September is the weakest time of the year. And I'm not going to be a contrarian and fade that, right? I'm going to understand what seasonality is telling me. And if we get through this period, right, then hopefully at the end of the year, we can have a nice rally. Similar, and you've heard me, if you're a regular viewer of this video, you know that I've brought this chart up many times. Again, it's not going to play out perfectly. So you shouldn't be looking at previous charts and overlaying them with current times and saying, hey, things are going to are going to play out exactly the same. But history rhymes. Here's where we made a high in July. We made a lower high in August. We made another lower high in September, and then we began to kind of fade down. Again, I'm not saying that that's exactly going to happen, play out this way, but would I be taking a lot of risk here? No. I mean, you could certainly try trades and then take them off if they don't work. I did that with one trade today, right? And then watch this 5-period moving average. This is going to be the first thing. If we gap down tomorrow, right, and price continues to go lower, we're losing that short-term uptrend, right? And then you be more defensive, and you probably want to, stay defensive for a little bit until price straightens itself out. But again, it should not surprise anybody that you're gonna, if we get weak prices in the second half of September. Have a great night, everybody, and see you in the trading room tomorrow. There will be no notes tomorrow because I'll be traveling a bit tomorrow. I'll still be in front of the screens in the morning, but I'll be out in the afternoon tomorrow.